Welcome to another Olives on Cryptos. Today we're going to look at BTC as always, of course, and also FET. This is what has been voted from the QIC team. It was a tie, to be honest, between FET and also Sol, but I thought FET is a more interesting project and maybe less risky. So let's dive into these two and see where we could potentially be heading towards. For educational purposes, of course, none of this is financial advice. I wanted to bring you back on the BLX and just show you a few things before we go into BTC's non-cyclical Elliott wave analysis. As you probably remember, there is a lot of cyclical, I would say, relationships that they are pointing to, well, in one case more upside, in the other case a low, a crash. And let's see a few of them now to see where we could potentially be heading. First of all, I just want to remind you that cycles are counted from low to low, okay? Not high to high, not high to low, or low to high, okay? So if we look at the first one from low to low, that took us 386 bars, which is on the 3-day, 1,155 days. From the low to the halving, there was 542 days. Now, if we replicate that relationship to the next cycle, you're going to see, of course, we had from low to low, of course, a much sort of bigger lag, 478 bars. But if we look at the low for low over here, 132 bars and 107 bars from low to the halving. If you see, there was a similar sort of reaction that we saw from the low to the halving back in 2016. It took us 542 days. Okay, now this one, the previous one, it took us 511 days. So just for 1 month, actually, we've failed to be closer, which is relatively good, considering, you know, relationships cannot be exact. Now, if we focus on that particular sort of structure, which seems to be leaning towards what we currently get, that would indicate that around March, okay, or even, around March, let's say, we're supposed to see a crash. But this crash could also come lower before that, okay? Because as I said before, we are measuring here lows to lows. If you look at the low over here to that low, this is considered to be like 152 bars. Doing that brings us to, around March of 2024. But if we do measure low to low over here, because this is the beginning of that leg, it's 132 bars to that low. That takes us to maybe like around the 20th of December or so, where a crash could potentially be seen. That would mean that we're going to get a leg similar to this before the halving. Okay, so anywhere between December and March, pretty much we could get a crash. This is what cyclical analysis tells us. Okay, now if we were to consider every single previous cycle, we're not going to see a new low and we're going to shoot higher, which is against my count. But I'm not going to change my count based on what happened in previous cycles, because structure comes before, I would say relevance, if that makes sense. We cannot just copy one structure and come and replicate it to the future and say, oh, look, this is what is going to happen. This is not about Elliott waves, okay? Now, we can indeed do it to see potentially what we could be heading. And there is also fractal relationships that they keep repeating, but we cannot, based on that, you know, change our count because it would be biased. And Elliott waves should be unbiased because they are quite subjective. A lot of people will tell you this. Now I want to show you another thing here, and then we're gonna go on to the shorter term stuff. If you look at the low from here to that low over here, they took us 154 bars, okay, which is very close to the 152 bars over here from low to low. Okay, so from there to there, we can actually just say in this particular case that the first and second wave took 152 bars, the third and fourth took 154 bars. This also in Elliott waves is very important. If we're to see something similar from low to low, again 152 bars or 154, it doesn't matter, you know, it brings us again to around March. But let's not forget 171 bars, this is where we had the low, right? 171 bars, this is where we had the low. Everything points to a very similar reaction here, guys. Everything so far tells us that. But look, if we look at Elliott waves and we are going to spot here that we'll have 5 waves up, that means that that leg to the upside has most probably finished. And you might see that count that comes as 1, 2, 3, and 4, and this is going to be 5, which I'm against. It is an alternative. It is possible, but not much. Main reason is the guideline of alternation. You cannot have one structure like this very deep and then another very deep on the wave 4. It's supposed to be, you're supposed to have deep and depth and shallowness between the two, alternate, or complexity and simplicity, or both, you know. So with that said, and plus something that I haven't really said in the past, that if this is a C wave of a flat, it should have been much faster. It is not, which suggests it's probably a wave A or a wave 1. Wave A is my count, and this is what I'm expecting. That suggests correction and then further downside. Now, when is it going to come? I do not know. But if we go according to what happened here, again, the date remains the same. Anywhere between the 20th of December and like 20th of March. This is when the crash is going to come. Now, for my count to play out, okay, what is the difference is that we're going to crash below that low. And we're going to head towards, I will tell you, based on my expectations, anywhere between, hold on, that's not too good. Anywhere between 8, then let's say 51, I will tell you why 51. Anywhere between 11 and 7K. So 7 to 11K, that will be the generational low for me, 7 to 11K. So what I wanted to show you is this. We have a low to low over here again, because we are potentially looking at a different trend now, right? But let's not forget, this is not a low. So we'll have an actual leg that is 126 bars. The low to low, there's 2 lows to lows, one to here, but we're looking at the first and the last. It's 100 bars, exactly. Okay, 100 bars. Now, if we were to assume that we're gonna get something similar on the second leg down, okay, that would mean that from the moment we get the low, we need to add another 100 bars to have the date of the generational low. Unfortunately, because we don't currently have a low, or we haven't turned, we cannot really speculate. But if you want maximum speculation, I can give you that. If we assume that the high is in currently, okay, if we assume that the high is in, then it would take the wave C anywhere between, I will repeat that because it's the turning point, 126 to 99 to 100 bars to have leg C done. Okay, and typically the C leg is faster than the A, so we'll probably go closer to the 66. Of course, another way to work out would be the Fibonacci time, but we're not here to look at this particular thing right now. So I also have 132 bars here, guys. This is from there to there, I repeat, right? So if we were to see 132 bars, it comes to 24th of December or so, where we're going to get that very big leg to the downside. That will be the end of that leg to the downside, by the way. So let me tell you this, if you want, or if we prefer to keep believing in this particular case that we're going to see a repetition of this, we want a crash by the end of this year. Okay, that's what we do. We want a crash by the end of this year, and we want that, of course, low to hold if that happened. If we continue going up from there, then we cannot really go and compare any other cycle. Okay, I mean, it wouldn't be prudent, but we can do whatever we want anyway. So yeah, now I'm gonna go and look at BTC. We're going to start with the main. This is my count again, and I'm gonna tell you now how I said about the 51, which should have been even a case from before. 51 is the 79%. Okay, and the 79% is that leg to the upside that we saw in the previous round. Maybe I should have shown you that before. We saw something like this, okay, and then drop from down there in the previous round. So from low, from that high, all the way down and then up, that was the 79 correction, okay? It was not here, it was up here. So if we were to see something similar happen, we expect the 79 to be reached, okay? And then a drop, a very rapid drop. And all of this should apparently happen in the next month, guys, okay? In the next 6 weeks, let's say, okay? So are we in for a surprise or not? If we were to see that 51K taken out, that means there is two cases there from there. 51, let's say there. One would be to see a wave down here and then move higher, which means the low is here, and I will show you the alternative for that. The other one would be to go down, instead we correct and fall down to around 11K. Okay, that would be if we get to 79. But if we finish anywhere between currently now and 79, then we can put a range anywhere around 8 to 11K for the generational low. Okay, unless of course if that is already in. Now, some alternatives before we go into the short term. One has been a case where this is wave A and this is wave B. This is 1 and 2, and we're gonna get something like of a 3, 4, and a 5. And that's going to end wave C. Still we expect upside. Another one is an diagonal, ending diagonal, which looks very ugly. That will be wave A and B, and that will be 1 and 2 supposedly. Sorry, no, that doesn't look like an end diagonal, by the way. 3, 4, and 5. That is a mistake here. It would be actually just an impulse up here. But again, the main point, upside is expected. An alternative for a wave B would be a flat, which would see this as an hold on. Oh no, the W, X, and Y this is. So W, X, and ABC for Y. You also have the alternate for the flat, A, B, and supposedly 1, 2, 3, 4, and 5. This is still valid from a technical perspective, because anything else looks like very ugly. And until as long as we are below 39.50, because it doesn't invalidate the diagonal. What, however, doesn't look pretty is that this is supposed to be well, and what do you take this? You will take this as a miss. well, we could potentially say these 3 and 4 still looks very ugly. So you understand the narrative over here. It's not much likely. The double zigzag is one that sees that particular case as a done case. No, actually no, W, X and Y, that will be the X, and supposing we'll get Y lower down, still expecting more upside, but maybe not as much left. It would see this as 1 and 2 and 3, and this is a triangle 4, and then supposedly 5. We are looking at the ending diagonal currently, and we're gonna crash from here without seeing much more upside left. And then that is the double zigzag alternative where the low is in. And that would see this as 1, 2, 3, 4, 5, supposedly, where again we're going to see a correction and further continuation to the upside. Now, obviously, on this particular leg, guys, there is so many different scenarios that we can consider. Even this, if you look at the main, okay, it's the same thing as having 1 and 2 here. So it could be during wave 3. So myriads of things could really happen. Now, let me just go and take it to the short term a little bit here. I will tell you what I like and what I don't like. First of all, just to let you know, if this is 1 and 2, and this is 3, 4 is like a triangle, and we're going to see further upside, right? Supposedly, we have a high in, and this is 1, 2, 3, 4, and 5 as well. So technically speaking, the high is in, the top is in. But then if we look at the measured move over here, you know, we can expect like prices to get up to around 42. If you consider the full 3-4 leg, we can look at 41 and 44.68. If you consider the net distance, you can even, you know, consider up like 55K or so. But me personally, I'm not such a fan of this double triangle here, guys, because I have actually don't even remember myself seeing that double triangle much. And this is, you know, from experience. So if we have A and B here, that might just be the end. On a different note, and since we said we expect perhaps 50K to come in, right? If we're gonna use just typical Fibonacci stuff, maybe this is just wave 1. We're gonna get wave 2 and then 3, 4, and 5. You know what I mean? If something like this happens, then risk of the low being in is going to increase, unfortunately, only when we go around 60K, 65, 60, 65, okay? My technique is to wait for the 79 Fibonacci retracement always, and that has worked for me, and that is around 51K. So as long as we remain below 51K, guys, or even at 51K, I don't see a significant change in my count, and that has been my count for years. I don't think there is more to add here, guys, but feel free to ask questions. And we're going to look at FET. I will go on the daily first to explain a few things. Let me just check which one we've got here. Okay, yeah. My main scenario is that this is a 1, 2, 1, 2. Okay, and of course that will be in our regular wave 2. Maybe you haven't heard it, but it is a thing because a lot of people just will ignore what happened here. You cannot ignore data. 1, 2, 3, 4, and 5. If you look at CoinMarketCap, there is no overlap here. Okay, so I'm going with the CoinMarketCap rather than with what I see currently on the charts. If you want to go with what we see on the charts, we are probably just like assuming that this is a leading diagonal. Okay, and there is nothing wrong with this being a leading diagonal, by the way, just to make that clear. I just think that because of how much momentum and volume we see into this wave, it's an impulse rather than a diagonal. Okay, if that's the case, then this is an A, B, and a C for a W. This is a simple X, and this is an A, B, and C for a Y, which says this is a new 5-wave leg. This is again something like of a W, X, and Y here, which, by the way, And if you want fractal relationships, this is what we should talk about when we're talking about fractals. We shouldn't mix things up. Look at this and look at this. We're not looking at how much we've fallen or whatever. We're just mainly looking at the turning points. Bottom to bottom, bottom to bottom, top very close, bottom here, another bottom here, same time, another bottom here, same time, the top here, same time, the bottom here at the same time. This is when you want to talk about fractals, this is what I would be looking at, okay? This is what a fractal is. So when you get turning points, when you get a lot of similar structure, okay? And this is what we got here. Either way, if I'm right, and this is 1, 2, we are starting a huge leg to the upside. A target for intermediate wave 3 would be around, let me, hold on, I'm not sure I want to do that. Would be around 110. Yeah, and then we'll be looking at 135, 170 for 5, supposedly. But because this is also a 1, 2, 1, 2 and 1, 2 again, we ought to see and measure the primary wave degree to see where primary wave 3 is going to end. And that primary wave 3 takes us around $2. Okay, and then above $2, you go higher up. I think it would be more, I always use log. I don't know. Sometimes it's just looking like the log, it keeps duplicating on the numbers and it's a bit crazy when you look at it. Can we go to 8? Yes. I don't think we cannot not go to 8. But if you ask me about 200, I wouldn't call this right now. So that is the issue I see with Fibo, or the log Fibo. Anyway, the point is, wherever it goes, it's up in this particular account. Now, my let me just show you some variations here. If this is a WX and Y, that can also be an ABC, okay, which means we could get another flat. But then we ought to ask ourselves, you know, well, I shouldn't have said another. It would be another in the other case. I will show you in a minute. But anyway, what I'm saying is that can also be an ABC, guys. So the reality here is that without breaking the 100%, which is around 192, let's call it $2, and we are far from that, this is not going to be confirmed. Okay, and this is one thing that we'll have to deal with and live with. That doesn't mean, you know, what we're looking here is pretty decent. But I'm just saying, before break 2, there is still risk for a flat pattern. So just keep that in mind for the long term. Before going the short term, I want to show you the alternative, which also is a very likely scenario, where this is wave A, and this is wave B, and this is wave C, which means this is a running flat. Now, this scenario is very bullish because when you get running flats and a very truncated wave 2, then that is very impulsive to the upside. So we would be looking for a lot of upside from the particular level. Probably wouldn't even, I mean, maybe we would see another leg down and then up, who knows, but well, that is 0.05, it's a bit low. But what I'm trying to say is that it's highly unlikely, that we're gonna go below 15 cents. You know what I mean? Ever again. Now, I will tell you something about this count. If this is a wave B, it means that we have to have a truncation, because that would be something like a W, X, and Y. And it's okay to have that truncation, because we want to see this as a five wave move, because if it's a running flat, we have to have 5 waves coming down. The issue is this structure is not 5 waves, okay? And this is where it gets weird. So if this is A, and B and C and D and E, we have a triangle here and the top is in as a truncation. Okay, and this is okay because this is a spike to the upside. So we are looking at wave 1, ABC as a 2, wave 3, wave 4 as a ascending triangle, wave 5. And then you have this, which is an extended fifth by the way. Okay, so just because you might say, what does this guy have that wave B here? This is why I have it here, because you have a clear triangle in here. You see that? You have 1, 2, 3, 4, and 5, and then that's it. And then you have the 1, the 2, the 3, the 4, and the 5. Actually, the 1, 2, 3, 4, and 5. And our top supposedly is at 10289. Okay. And I repeat why, because we want this to be 5 waves plus that as a W, X, and Y makes more sense as well. Okay. Anyway, now we are ready for the short term. But most of my scenarios are looking for more upside. Now going with the main, if this is 1 and this is 2, this is 1 and 2, and we are very likely in wave 3 still, waiting for the fifth of 3 to finish, then get a 4, then a 5 for wave 1, and the wave 2, like pullback, would be the opportunity, an opportunity to perhaps consider the long-term sort of investment. Now there is of course the chance, as well as with any previous structures, that this turns into a flat. Okay, we could see further downside and then continue higher. But you know, do I believe that's the case? I don't know. I don't think so. I'm just looking at the momentum and volumes here. Flow is okay, but this doesn't look like we are going to go, you know, down close to around the 16 cents again. Okay, that is what I'm trying to say. And also, if we look at the 4 hours here, guys, if this is 1, 2, and 3, and 4 and 5, look, this really looks like well, would I? No, maybe I wouldn't. Maybe 1, 2, 3, 4, and 5. That would be wave 1, right? And then you would say perhaps a wave 2 here, and then you have 1, 2, and 1, 2. But thing is, you know, how can we potentially make that change? The only way would be to have our wave 2 here. So we would be looking at this as a WX, and then we would have something like an like some sort of running flat in wave Y. Okay, so it would be like ABC, ABC, and 1, 2, 3, 4, and 5. And that would be like a running flat. Okay, so it would be like wave 2 is here. This is a W, X, and Y, and wave Y is running flat. That, however, would probably just lead to further upside, and we wouldn't see those corrective structures to the upside here. Okay, so it's either that this is 1 and 2, this is 3, and we'll have an A, B, and a C for 4, and this is 1, 2, 3, and 4. One more up for 5 and in diagonal, and we'll go down in wave 2, and then we'll continue higher. Or wave Y is here, and this is like 1. Well, yeah, it would be perhaps even 1, 2, 3, 4, and 5, and that would be a leading diagonal, and then we'll get 2 and 4 and 5. And this is also possible because if we measure, for example, if we assume this structure, this is A, B, and C, let's say, and this is our wave 2, and that would be the 3 and the 4 and the 5. You know, we just need to always check what is the relationship between 3 and 5. You see the 100 is like borderline. Hold on. Yeah, the wave 5 would be borderline, so that's one thing to remember. And then we need to measure wave 4. Hold on. Let me take this off so we can do it properly. That would be A, B, and C. A, B, and C actually would be here. So if that's 3 and 4, the one would not be done case. So we would just have to force some wave to have a leading diagonal here. So anyway, what I'm just trying to say is that this could also be an ABC. Okay, just be prepared for it. And even if we do see that leg to the downside, it might be a running flat. It's just that typically this is a wave 2. We would want to see that to be a clear 5-wave move to the upside and get a decent 4, which we currently don't get. What we do get is that this. And the 4 in comparison to that second doesn't really match. Okay, so let's see how it's going to play out. Either way, this is also the short-term count and the variations. So if you have any questions, feel free to ask. Comments respectful as always, and let's not forget, none of this financial advice is purely educational.